In this video, we'll talk about the newly introduced LTCG or the long-term capital gain of 10%. If you're selling your stocks or equity mutual funds after 1 year from the date of purchase, then your profits are subject to this long-term capital gain tax of 10%. One caveat is the up to 1 lakh rupees of this profit is tax-free, but beyond 1 lakh, you are supposed to pay 10% of the profits as a long-term capital gain tax. Let's take an example to understand. Suppose you invest 10 lakh rupees in 2018 February. Now after 2 years, the total value becomes 13 lakh and you want to sell it. So when you sell it, you make a profit of 3 lakh rupees. Now your long-term capital gain is applicable on the 3 lakh. The first lakh of this 3 lakh is tax-free. So you're left with 2 lakh. You're supposed to pay 10% tax on the left 2 lakh, which is 20,000. So in this example, you'll be paying 20,000 capital gain tax on the equity mutual fund. But in case your total profits, realized profits, are less than 1 lakh, then you're not supposed to pay any taxes on it. Now what if you are selling the investments less than 1 year? Now for less than 1 year, it's called short-term capital gain. The short-term capital gain tax was 15% earlier and it stays same. It is still 15% on your short-term capital gains. Now the government has said that the investments made till 31st January 2018 will be grandfathered. Now what does this term grandfathered mean? This term grandfather means that all the policies that are being introduced now will be applicable from now onwards and not from before 31st January 2018. So let's take an example to understand what the term grandfathered means. Suppose you made an investment in 2015 of 10 lakh rupees. On 31st January 2018, the value has become 15 lakh. You sell the investment in 2020 at 20 lakh rupees. Now the actual capital gain is 20 lakh minus 10 lakh is equal to 10 lakh rupees. But since the policy was introduced in 2018, you will be paying capital gain only on 20 lakh minus 15 lakh, which is the price on 31st January 2018. So your capital gain is equal to only 5 lakh. Now out of this 5 lakh, 1 lakh is exempted. The rest of the 4 lakh will be taxed at 10%. So you will end up paying 40,000 rupees capital gain tax on this investment. Hope this makes it clear. Thank you.